up onto the stage Faheem Chowdhury, who's our transactions portfolio lead for Manufacturing Africa. And Faheem will be delivering a presentation, after which we'll then move to a break, and then we will come back for our first panel session of the day. So thanks very much.
Hi, everybody. I guess the sound's okay. Thank you for sitting in. So my name's Faheem Chowdhury, and I've been based in Kenya now for the last 2.5 years, focused on a program called Manufacturing Africa. Can we move to the next slide? So I look at the transaction side of things in our program. Predominantly, we're a program that's trying to increase investment into the manufacturing space. That's to unlock transactions. We're an investor readiness and sector sort of transformation program funded by the UK government. I work for BDO. I've got colleagues in the crowd from McKinsey. And we've been delivering this program over the last 3 years. So we operate in 6 countries currently, predominantly Kenya, Ethiopia, Rwanda, Nigeria, Senegal, and as of the next few weeks, Tanzania as well. So that's what we do. Really happy to have a conversation. If you'd like to learn more, we've got a booth and some flyers and stuff that might save you taking photos. So today what I'd like to do is, if we move to the next slide, so that we can skip that one. Today what I'd like to do is discuss a little bit about our experiences delivering the transaction support over the last sort of 3 years. We've managed to have quite what we feel is quite significant impact. We've worked on over 130 deals so far. We've had close to 30 financial closes in that time. And the FDI that has flown in, that has been drawn in, is close to, or well, it's above 800 million pounds sterling so far. We have different measures in M&E and other impacts that also come about in terms of green climate, gender outcomes, etc. We've also done a lot of work with governments and policy and the enabling environment to try and enable manufacturing to grow. So there's been a lot of work that's happened. It's not always been easy. Each country has been different, but hopefully today we can share a little insight into our experiences with that. And just to say that the slide that we skipped, a lot of our services are around sort of corporate finance type things to work with companies or with investors to try and get deals to the right technical level to be investable, and also sort of commercial diligences, looking at impact, looking at ESG possibilities, gender possibilities in deals to improve the outcomes that happen with each transaction as well. So if we move to the next slide. So I think that the first message that I'd like to discuss a little bit is around pipeline. We have teams on the ground in each of our countries that we operate in. They work full-time, they're meeting companies, they're meeting investors, and it's not been easy, but we have been able to build quite an active pipeline, and that continues to grow, and that continues to enable us to do the work that we do. I think we do hear messages when we speak to some investors talking about how difficult it is to get the right pipeline. And yes, there are many companies in the market, but those that seem to be investable seem to be fewer. And I think some of our learning has been, well, actually, being on the ground, very active, is absolutely essential. Having those conversations continuously, and I have to the credit of many private equity funds, DFIs, etc. I do see that the case, but then if you're looking to be in a country that's a bit tougher, maybe from some perspectives in Ethiopia or so let's say Tanzania that's now opening up, again, the sort of flying in and semi part-time has been tougher for us to build pipeline. We've had to be on the ground, spending a lot of time. We're also very open. We're trying to be additional to the market. So we are doing stuff that's a bit tougher, and that does mean greenfields are quite a decent chunk of our portfolio. We have had greenfield transactions close, and I would say I know it is tougher to invest in companies without the track record, but there are different types of greenfields. There are some that are established businesses or a member of a family business who is looking to do a new venture in something relating. So for us, a company that was always trading, starting a manufacturing production center, that is kind of a greenfield, but it's not as risky. It's not the same type of profile. And I would say there is really nice, strong pipeline, which is less competitive. Rather than everybody going after the same assets, I would say that could be a source to extend pipeline. And then, yes, I understand the need for export focus, foreign currency, etc. But that kind of longer term view, and is this a business that could be export focused in a future phase? So yes, the domestic market makes sense for the next 3 years, but okay, beyond that term, there is some export and currency potential. That de-risks it for our partners, but it opens up a deal that might not have been that interesting to begin with. So some of those things, I have tended to see within our closed deals so far, and this will change, a lot of international CEOs or internationally trained CEOs and management teams being able to access capital more readily. We have noticed that bias, but I think, again, that patience, that working with people who haven't had that fundraising experience has also unlocked deals. And perhaps when we support some companies who haven't got the experience dealing with international investors, we've had to take a bit more time, go through the process more slowly, but they're no less quality opportunities. We've had some great outcomes from some of those deals. So the next slide, I've sort of just dumped little bunches of data with a few messages. I think patience is really important. We work across the spectrum, so there are some deals that are very ready for investment, and we're perhaps thinking about investors that could be a good fit, or just looking at the ESG red flags in a deal. So we're doing very little for them. And there's others that we're developing. So we've got a broad spectrum, but the time to close for financial closes has been very long. I mean, we've had a deal that's taken 3.5 years from the point of support. So I think that patience determination has been really important for us. And also not having the entrepreneurs lose heart. I think those especially that are less experienced, we found that it's very easy for them to be 1.5 years into a process or a year into a process. Look, I need to get on with things. I've got a business to run. Can I continue with this? And that sort of patience from investors, that's the way things are messaged, so it doesn't feel as invasive, that has been helpful. Of course, they've got to be the ones who are very determined, driving this, perseverant. But I think that patient story, time-wise and in terms of the duration of the investment period, but also time-wise in terms of information getting there each week, communications, etc., them being able to give time and both sides communicating effectively. I think that has been a distinctor to some of the deals that we've seen close. Our assumption going into the program was that 1 of every 4 deals would financially close, and I think that's still where we're at. We're hoping to exceed that target. It is not easy given that we're going for slightly riskier deals. We're not going to support something that an advisor in the market can already do and somebody can pay for. But nonetheless, I think including all these risky, earlier stage, greenfield, established businesses doing something completely different to what they've done before, we still do see financial closes. And with the lag, potentially we can even exceed the 1 out of 4 that we're seeing. The last point is also really important, and I think that's an opportunity for a lot of the investors in the room, which is the actual capital structuring. The different modes of capital, debt, equity. I'm seeing a few more structured finance, trade finance, mezzanine funds coming into the market from time to time. I think they can play a really important role, and I definitely encourage that space to grow. But there's other things that can really make a transaction happen, which is things around the phasing of the funding, convertibility, different add-ons or mechanisms within traditional structures. that flexibility has really helped a lot of our transactions. And those funders who are able to be flexible on their own, rather than saying, look, we'll do the debt, you go find an equity partner or a mezzanine partner. Some of those who are able to offer a few different products together through one source, or be very close to a partner in that they've done 3 or 4 transactions with a DFI, if they're a PE fund, for instance, and that flexibility has come from that side. I think those sorts of structures have been really, really helpful in getting some of these more complex deals over the line. And for us in manufacturing, it is a complicated space. It is a heavy CapEx space, so that is important. We move on to the next slide. I think this is the last slide I'll focus on, which is there are a lot of opportunities in the market. I'm sure you're coming across them. As a program, we're quite fortunate that we can add that value, and sometimes it's just 1 or 2 areas that needed addressing for it to be an investable deal. And sometimes those 1 or 2 areas, the companies don't know how to go about that, and for an investor, you don't have the time to handhold somebody through, really thinking through, I don't know, the market, the supply chain issue that they're thinking about, that projection, growth rate, and how it's really going to be managed, and how are they really going to win the particular contracts that they need. These sorts of topics, you might not have as much time, but just to say, it might just be those 1 or 2 things that just dramatically change the prospects of a company. So that is something that we're able to help with, but that is something to bear in mind. It might not be a complete write-off. If there's avenues to try and get something to work, please do explore them. We do tend to, of all of those bullets, the other thing we talk to some of our companies about is thinking bigger. They might just come for $1 million today, but yes, it's a tough environment and you have to live day by day to run your business, but being able to think 5, 10 years in advance, how are you going to be the market leader? That is something we really encourage. I mean, if they've come through a process, we believe they're able to do that. But for them to start to think on that scale also makes it dramatically more interesting for yourselves. So that's a question we ask. What would it take for you to be the market leader or to go 5x in your business? What would it take? What investment are you up for doing that? And I think that question often dramatically changes conversations. There are some other things on there. I think valuations have been tough. There's often some differences in expectations, but I think that prospect of being a big scale company over a long term, if you're going to be 5x, then that valuation conversation becomes very different because, okay, you're giving up more of your business, but the future could be a lot bigger. So I think those are the things I'll focus on. There are things that we're trying to do in terms of CDD, ESG, trying to add those pockets of value. And we're really open to conversations. If there's other things we can do in the commercial space, we're not technical people, engineers, experts on machines. We're financial and commercial people. But if there's areas that you're able to feed back to us and say, look, this is a problem we're seeing in companies, we're really open to designing support and helping companies in that way too. So I think I'll close there. Thank you so much for your time.
Thank you very much, Faheem. That was very insightful. And if you'd like to ask Faheem and his colleagues any more questions, they do have a stand which is on this floor around the corner. So do go find them and make sure you pose lots of questions. Our next speaker is actually not here, unfortunately, so you're released for 15 minutes. If you're not back, I will come and find you. And then we will then move on to our next panel session. So please feel free to go out and grab coffees and waters and things and come back. Thank you.